All right, all right, all right. Believe it or not, I'm here again in the afternoon session for Power Hour. Are we ready to go? Are we ready to go? Are we ready to rock and roll? We need a market that's moving for us today. We had good luck with our strategy yesterday in the morning session. So I thought we'd try the same strategy again in this session. Now we have two versions of this strategy. So I'm going to go through and I'm going to show you the settings. And of course, we are using Track and Trade. This is Track and Trade Live, and we're using the futures version. So if you want to join along with us, run over to Track and Trade, download the futures version. You get it for 2 weeks for free, no credit card required. Just download it and you can join us. Take the settings that I give you here and practice and see if it works for you. If it does, great. You can do it yourself. All right. So again, we're using the futures version. It's a 7-time stocks and commodities annual Reader's Choice award-winning platform. So, very well known in the futures industry, trackandtrade.com. Go get it. Join us here and we will give you the settings, show you what we're doing. All right. So the first thing we're going to do is we're going to come right up here to the trading tab. And I'm going to show you, we're going to use Scalp. Now, there's two versions. Again, there's two versions of this that we've got. We got a limit version and a stop version. I kind of lean towards the stop version. I got a trading buddy who leans towards the limit version, but I lean towards the stop version. So I'm going to come in here. This is the limit version right here that's set up. So I'm going to right click on it. And it's number 99, and it's the limit version. So let's come in here, and this is a trailing limit, all right? So it's a trailing limit in Track and Trade. So it's going to trail up behind the market. The market would have to pop back down, fill your order, and then start to rise once again. So it's going to trail behind the market. In this case, we got 5 ticks. So it would have to kind of have a little pullback against the rally, hit 5 ticks, and then start to rally once again to make money. Kind of a weird thing, but that's the way it works. The stop, on the other hand, goes the other way. We drop it from the top. And since this is a drag and drop application, we're doing everything on the screen. We're just dragging and dropping orders on the screen, and then they jump based on what criteria we've got programmed in here. So on the stop version, it starts from the top. The limit version starts from the bottom, right? So we got a bar that's building like we have on the screen now. And with the limit version, the bar is rising, and then the limit order trails up all by itself behind it. The market then has to pop down to fill the order and then start to rise once again to make money. So a little odd because the market, sometimes when it starts to fall, it doesn't go back up. It comes down and just keeps on going. But that's the nature of the beast. You find it actually does fall about 5 and then pops back up. And we don't go very far, not just another 5. We can go 4 or 3, but 5's kind of a good starting point. You can adjust your limit order for profit taking. So what you're really doing is you're playing kind of a 10 bar range or a 10 minimum move range. And so that's the limit order side. If we change that and do a stop, we drop it from the top so the market rallies up, and then we wait for the market to pull back. All right. And then once we think it's pulled back and it's stopped pulling back and it looks like it's going to start to rally again, we'll drop it. It'll drop down. And then if the market does continue to fall, it'll continue to trail down until the market then turns and starts to rally once again. It comes through our stop order and goes up. Again, 2 different ways of doing the same thing. I prefer the stop version, but we're going to start off with the limit version, and then we'll move to the stop version. All right. So what we're going to do is we're going to wait for the market to get up high. We're going to drop it in there, and now we're going to wait for it to see how it jumps, moves all by itself. See, that one just stopped us out. So that's the limit order. I'm going to change and we're going to do the double. All right. So I'm going to take this and we're going to do the limit order. Actually, I should have done it the other way, huh? I did it backwards. I did it as if it was a stop. It's kind of like I'm a pilot and I fly fixed wing aircraft. And I went to my instructor one time. I told him, I said, you know what? I want to fly helicopters. And he goes, you know what, Lan, it's not a good idea to be both a fixed wing pilot and a helicopter pilot, because you kind of get the natural thing that you're supposed to do in an emergency situation. And if you're in an airplane, you've been trained in an airplane, you're just going to kind of naturally do the right thing. He says, if you go over to a helicopter and then you get into an emergency situation, he says, and you've been trained in a fixed wing aircraft, you have a tendency to do in the helicopter just kind of out of rote natural training the same thing that you do in an airplane, and that's the wrong thing to do in a helicopter. So he says when we have pilots who do both, we see more accidents because they get confused in an emergency situation of which one they're supposed to do. That's what happens sometimes in trading. We do all these different strategies, and then sometimes we get into a quick situation and we do the wrong thing because we're thinking of the wrong strategy. So, in my opinion, I believe it's better that you find the one you like, practice them all. It's fine, but then stick to it and just do the one, because you get into a quick situation, you end up doing the wrong thing and you end up losing money like I just did. Dropped it from the wrong side. So that's just a little food for thought there. Try to stick to one that works best for you. I should probably just stick to the stop one because that's the one I like the best. But I want to teach. I have to teach, right? I have to teach you guys all these different things so you can decide which one you like. Because again, I got a buddy who trades and he likes the limit one way better than the stop one. So it's just different strokes for different folks. So let's come in here. And I guess I should, it's just so close. Let's fix that. 99 with the limit number. And I'm going to change this so that we can have our limit order is 5. That's our profit taken. Then our stop is 20. I'm going to take that out to 45. And the reason I'm going to go so far away with the stop is because I'm going to use the double-double, all right? The double-double strategy. And I need the market to be a little bit further away for that. So we're going to go ahead and let's try it. See if 45 is a good number. And we're going to drop that. It looks a little bit better. Okay, we're going to see that market. Now we want to see it pull back. See, now the limit order is going to go up with it, pull back, and then it needs to pop up and rally. And so what I'm going to do is I'm going to drop another one in here if it pops down a little bit further, a dollar cost average in. So that'll get us a second order in there. Let's make it a little larger so you can see it. And then it should rally. And okay, we took one off. Do we have to drop another one? Let's see if it's not going to go up and fill it. We'll wait for it to pull down a little bit farther. And we're just playing onesie twosies here. Okay, it's pulled back. We get it. Oh, I probably missed my opportunity on that one. Okay, so I filled the second one. Now we need it to rally. There it rallied. Okay, I got both of those. So we're back to, got our money back, at least back to $5 within. All right, so let's see. This is the limit one. Again, the limit one, we need it to kind of pull back. I like it to pull back as far as possible. We need to have it show that it's making a nice rally. It's making a nice rally. It's kind of burning a little higher here, right here in the beginning. See if it'll come down just a little bit more. Drop it in there. Oh, missed it. Now it's chasing it. Okay, chase it up there, chase it up there. There, we got it. So that's just one. Let's try one more. Let's see if it wants to pull back. Don't overtrade. You know, I have a tendency to do overtrade a little bit because we're, you know, financial entertainment here on YouTube. So I have to entertain. If I just sat here for 10 minutes and didn't take a trade, you guys would all leave. So I probably overtrade. When you're doing this, if you're going to do this strategy, you're going to want to sit there a little bit more cautiously. When I do it, I sometimes, you know, I'll sit here for 20 minutes without taking a trade. I want to make sure it's in the right spot. But again, and I like to do the stop a little bit better than the limit. The limit, not that it's bad, it's good. Some people like it. Ooh, look, it's way up there. Okay, here it pulls back. Let's drop this in there, see if we can. Okay, got that one too, so that's good. So we got back our $100 from the mistake I made, putting it on the wrong side of the market. The market's advancing, so that's good. Now, what have we got here on the charts? First thing you need to know is we're using Heikin-Ashi. So these are Heikin-Ashi bars. You don't necessarily have to use Heikin-Ashi bars. I just like them. You know, for this strategy, you can use something else. You can use just a standard. Oh, I went the wrong direction. How did that work? Oh, I guess it just worked. I get used to dropping the stops from the top. You got to drop the limits from the bottom. Okay, now pop up there. Okay, so you don't have to use the Heikin-Ashi bars on this if you don't want to. You can use the regular standard bars. Perfectly fine. Okay, wait for it to pull back. Pull back. There's a nice pull back. Pull back. Keep rallying, buddy. That's what we want. We want to see a rally bar. There we go. There's another one. Why aren't you using more than quantity one, Lan? Look, you're having a high probability of winning ratios. Why don't you do quantity one? Because that one time where you don't do it, right? And you get stopped out, that's where you get your hiney handed to you. So if you just do one, be cautious, careful. Again, you have to pay commissions and fees. We're in the demo account trying this. Does it work the same in the real money account as it does in the demo? It does, actually, surprisingly enough. It works almost exactly the same. If you start doing larger quantities, then that one time where it blows up in your face, you just lose everything. It's easier to take just small little cuts against the market. Now we're going down. Let's see what happens here. Get it to pull down as far as it can. Little cuts. That way, when you take a little cut, it's just a little cut. Because you gotta take a little cut once in a while. I mean, when you can go with bigger quantities when you have a bigger account, but I don't know. We're on a big account. We got $35,000, so we could do a bigger account if we want. We could do more if we wanted to, but we're already up $150 in 10 minutes. That's pretty good wages. Can't get that at the gas station. Ooh, we're dancing now. Let's put another one in there if it drops down. And this is another reason why I like to start with one, because if it falls back against me, I can dollar cost average one down. Oh, didn't need to on that one. So the limit's doing pretty good today. Can't complain. There's another one. Okay, pull way back, way back. It's a red bar, red bar. Way back. Man, I want to see you do more than quantity one. Okay, we'll do quantity three. But this is a bad spot to be. Look, it's way up there in the peak. And it's gonna have to rally to make us money. He's got to pull back and rally. Pull back, pull back. We want it to pull way back and then start to rally. Now we're on a range bar 50. The spread is 2, which is good. Sometimes we'll see a spread of 3 or 4, sometimes 5. That's not good. When spread's wide like that, don't do this strategy at all. You got to have a tight spread. 2 is about as wide as you want to go. If it starts getting a spread of 3, see, it has a high of 3. The average is 2.1. The low is 1. Where are you seeing that, Lan? Where are you seeing that? Right here. Right here, up in there in the right corner. It says right there, spread is 2. What's the spread? Well, it's the difference between the buy and sell line right in here. So you want that as tight as possible. You don't want a big gap between it. Okay, need it to pull back. There we go. Okay, let's drop it in there, see if it'll pop for us. Okay, we got our 3 in. Now it's got to go back up. Go back up. Go back up. There we got it. Okay, so you wanted me to do 3 instead of just 1. There you go. I did 3, and now we got $75 out of that one move. Let's go over and do the stop version. That's the limit version. All right, so now we're going to come over here. That's 99. I just call this the golden strategy. All right, so we got it set it again at 40. I'm going to put it at 45 because we had a 45 on the other one. And we're going to do 5, same. Ticks behind, we're going to do 3. We got the spread is, so we're really only following behind the market 1 tick. We could do 4, but let's just start with 3. I mean, we can always adjust it. Okay, we're going to make this one our default strategy. Let's call this one, let's give this one the name. So this is 99 golden strategy, stop golden strategy as opposed to limit. And let's put in here, we're just going to do limit 5. and we're going to trail 3 ticks behind on the stop. All right. So now what we're going to do, okay, so what are we doing here? We want to find the trend, and the trend is now down. It's reversed, right? And so which direction do we think the trend's going to go? And then this is the stop version. So we're going to drop it this direction on a pullback in anticipation of a continuation of the trend, which is down here. Now, we don't know if this is really a downtrend. It could just be a pullback and a rally. So we'll wait and see. But it pulls way back, way back. And then the stop. There we go. We got it. And we did another quantity 3. So we're at 355 right now. Now, again, we're dropping the stop this time. So it's a little bit. Watch that tiny chart up there on the top if you get nervous about the direction. Okay, we're going to trail up behind it, looking for it to fall, Get another one in there in case we dollar cost average. If it goes up a little bit more, it's not falling. It's starting to rise. It's going against our position, and we're on with 3. Come on down. There, okay, we got it. Let's go back to 1. I'm getting a little nervous. Okay, so we're at 420. If we break 500, we're done for the day. Our goal is $500 a day, right? So let's try this one more time. This is going to go up or down, up or down. Okay, now this is a stop, so we have to drop it from the other side. Remember, we have to subtract commissions and fees. This one doesn't have any commissions and fees. So if you're 5 per side, $10, then we're really only at $250. I don't know what your commissions and fees are, though. The number market stalled out right there. It's not moving at all. So let's hold on a second. Where it stalled out, let's go over and look at the stock market for a minute. We'll leave ourselves at $420. That's a good start on the day for 15 minutes worth of work. Don't you think? Can't get that at Walmart working as a greeter. All right, let's come over here to the stock market and kind of spend a little bit of time looking at our existing portfolio. So we're going to start up here with Apple. Now, I want to start with the S&P 500 because we were talking about the S&P 500. We drew our natural trend lines, and none of us are scared, right? I mean, this didn't freak any of us out today because we were all prepared for this, right? Everybody's prepared for this. So we came in here and we said we got our natural trend line, our 3-drive pattern. Let's draw our 3 little mountains in here. So mountain 1, right? 3-drive pattern. There's mountain 1. Here's Mountain America 2 and Mountain America 3. And so we got that 3-drive pattern, and right at the end of the 3-drive pattern, right across that natural trend line, that very first A to B, that little geometry that we drew in there, right? A, B, C, boom, shot that thing up there. And look at that. Zip, right there. And so where do we expect it to go? Well, nobody knows. Nobody knows. But where does it generally go? What's the probabilities? Probabilities tell us that it'll probably come back somewhere around this region here. That's a big drop. That's a big drop for this market, but that's not unheard of. Look at this market. If we come back here to the previous one, and right here, let's draw, this is a natural trend line in here too, just like that last one, right up there. Just like the same thing. We'll do our little Mountain America here. There's Mountain 1. There's Mountain 2, maybe. Mountain 2. Mountain 2 didn't come all the way back down. So it didn't touch right there. So we end up with another natural trend line. Let's take this one and we go from there to there. That's a progressive trend line. Just like that. And then we come in here with our next little Mountain America here. Up to there. Ooh, that came all the way back down and touched that first line. And that was our 3rd line. That was it. And bam, that thing dropped like a rock. And where did they go back to? Draw your Fibonacci ruler in there from bottom to top, just like a train on rails. You're all well trained. You can all do this yourself. And there, that market came right back in there, even broke through the 61.8 and came down farther. We got another little hidden Fibonacci line in there. We don't use it very often, but if the market breaks through, there it is. Oh, and look at that. Came right down to that fourth Fibonacci line, 78.6, touched it, said, look, I can touch it, just to flip everybody the bird, and away it went, took off again. And up that thing went, boom, 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 3, and then just like we expected, how many of you got out of all of your long positions like I did? I did that over here too. I told everybody, I said, look, I'm getting out of all my long positions. I'm not going to ride that thing all the way down. I don't know how far it's going to go. So I got out, took them all out. Does it mean it's going to stop? No, of course not. It's just probabilities. We're just trading the probabilities. And when you go to Las Vegas and you playing blackjack, you're going to be a better blackjack player if you play the probabilities. Doesn't mean you're going to always be right. Doesn't mean you're going to always lose. Doesn't mean you're going to always win. Just playing the probabilities. So when the market got into a 3-drive pattern, I said, hey, probabilities are it's not going to go up. In fact, probabilities say it's going to fall. And so I took out all my long positions right in here. And now I look smart. I was worried that I was going to look dumb because I was expecting better earnings on some of these big stocks like Microsoft. I thought Microsoft was going to have good earnings. Did you see what happened to Microsoft? It flushed, which is a big reason why this thing flushed too. But top of the 3rd drive, I didn't have any positions on. I didn't get hurt by this at all. Took them all off. Said I'm at the top of the bars, top of the 3-bar pattern. If it would have rallied and gone up, and shot up like that, I'd have felt stupid. But not really, because it's just the odds. It's just the probabilities. We got into a 4th drive pattern, and I said, I don't really want to be along at a 4th drive pattern. That's a unicorn pattern. I don't want to be up there. Okay, but let's go over and look at Microsoft. Look at this baby. Look at that. And we did here in our simulator for our class. We do have a sold put there. So what's that sold put? It says we're down $470. Are we really down $470? No, not really. We're not really down $470, even though it says that. Remember, these numbers don't pertain to you unless you decide to bail out. If you decide to bail out of your position, then yeah, those numbers pertain to you. But since we're not bailing out of our positions, those numbers don't pertain to us. So we sold it for $9.55. We're going to get our $9.55, and we may get assigned some shares, right, of Microsoft, and we would get some shares of Microsoft if it touches that purple line underneath that red line. They'll give us our shares. Now, is there a possibility we could get assigned our shares right here? Well, there's a possibility, but it's probably not. Not very likely. They're not going to. If you bought a put option here, I bought a call option here. Sorry, a put option. If you bought a put option here from me because I sold it to you, are you going to exercise your right to buy some Microsoft right there? No, probably not. You have a put option. You're probably going to wait for it to see if it's going to go down farther. And then your luck, because you never make money when you buy a put or buy a call. It's kind of negative nilly, right? This thing's going to probably come down and turn around and go back up again. As long as it goes back up again, and there's lots of time value in there. So if they exercise, remember, if the guy who bought this put option from me and gave me that $995, he was pretty smart today. He's like, oh, I'm pretty smart. But if he lets it go, thing is, he's got a lot of time value still in there. And so he's not going to really exercise probably because he's got too much time value. And when you exercise, you give up all that time value. Well, there's a whole bunch of time value in there. So he's probably not going to do it. And so what happens is he'll hang on in anticipation of the market continuing to fall, thinking, hey, I did the right thing today. Now the market's going to fall. But how many times have you guys seen the market fall like that, only to rebound a little bit, do a little bit of this, and then turn around and go back up again? My hope is that's what happens, right? And he doesn't want to actually exercise his right to take the position here, the short position on his stock, because he's probably just going to try and make money on the put. He's not going to try and make it on the stock. He doesn't want to actually own the stock short here. So that's what he's going to do. He hopes that I liquidate out, but it doesn't matter. He's not going to get out, so it'd go to somebody else anyway. I just lose my money. But so I'm not going to get out either. He's not going to get out. He's got too much time value to lose. If I liquidate it, I get 460. I'd rather have the shares. So I'll just hang on to it and get me some Microsoft shares down here. Now, if the market just keeps flushing and I could take my shares, yeah, I would be down in the shares, but that's okay. Not too worried about it. Microsoft will good company. I think it'll turn around and come back up and I'll be okay. And I can sell some call options against it while I have the shares, and that's okay. So that's why I'm not worried about taking the shares. But I don't think he'll liquidate anyway. I don't think he'll exercise because he's still got too much time value. If he exercises, boom, he loses all that time value. And in the meantime, the market will probably turn around and go back up and hit that purple line above my red line anyway. So I have not a lot to worry about right now. If it's a little bit closer to the purple line, then I might be a little bit, but it's down here, I'd be a little bit more worried about him exercising. Okay. He might exercise if it was down into this region down in here, but since it came down so fast, he probably won't exercise here. Lose all that time value, and all he would do is just get a short position on his stock right there, which he probably doesn't want. He probably wants to anticipate that that market's going to continue to fall. So that's the logic. That's the psychological side of what's going on here. Remember, I got a nice little Sunday school lesson for you I want to show you. And it has to do with that exact thing. So I want to show you. So trading is a game of strategy and wit, right? Where you must think several moves ahead to outwit your opponent who's doing the same exact thing in attempt to outwit you. All right. So when I sit here and in my head, I got to think like the other guy on the other side of my option. He did the right thing, right? I did the wrong thing. I thought that Microsoft was going to have good earnings. So I took a long position by selling a put. All right. I took a long position, but he was right. I was wrong. Okay. Now he moved his pawn into place and I'm sitting here going, okay, what am I going to do? So I got to think about what he's going to do. So it's a game of wit, just like chess. So you want to think several moves in ahead, kind of imagine what you think that guy's going to do. What would you do if you were in his situation? And that's going to make you a better trader, right? That's going to make you a better trader. Okay. So that's what happened with Microsoft. We're going to sit here. He moved his knight out into the middle of the chess table. So I'm going to have to think for a minute, wait and see what happens before I move my knight out into the middle of the chess table. All right, let's go look at some of these others. This is Apple. Apple flushed too, same as the S&P. Now, we did the same thing. We thought, well, maybe Apple will have good earnings and it'll pop up right here. So what did I do? I put a long position in there, which is I sold a call right there at the market. You know, we were talking about it. I said, yeah, we can do that. And if Apple has good earnings, we'll make money. But Apple had bad earnings and it fell. So rather than hanging on to it, because I put it right at the money, I just liquidated that one. It was a $300 loss. In fact, it's probably still in here. Chart alone, chart Apple. Yeah, $370 loss. So we took that $370 loss off of Apple this morning because I just didn't want to hang on to a loser that was an obvious loser. So take your lumps. We thought Apple was going to have good earnings. They didn't. It didn't pop. It broke just like the S&P 500 off that 3-drive pattern. Lan, why would you take a long position at the top of a 3-drive pattern? It was a earnings play. I thought maybe we'd get a pop off of earnings before it flushed. I thought we would, I didn't know if we would flush now or whether we would flush more closer to the election. I thought we might flush a little bit more closely to the election, but I thought it might go a little bit sideways, but bad earnings, so it flushed. So that was Apple, and we took that one off. We still got these sitting here. They show down again. Remember, these numbers don't apply to us unless we decide to get out early. So we've got that to look forward to. Apple coming down here. Maybe we'll buy some Apple down there, or if we're not, we can roll it out. All right. AMD. Same thing. AMD. We thought maybe we'd have some better earnings on AMD. This market actually AMD, I think, had some good earnings. It popped. That's why we put that in there. And then it flushed. But it's flushing against that 3-drive pattern on the S&P 500. I think everybody's getting scared and nervous, right? So we come in here and go with our progressive trend line. We put that one in there. Preferences. Just like that. And man, it busted below it and it's flushing like a toilet. But that might be good for us. We can buy some AMD way down here. Of course, we got a lot of these going. If we have to buy a bunch of these stocks, we're going to have a margin call. We're going to have to liquidate some of them. Let's see. We're way over leveraged. But that's what we like to do in a demo account because we got to learn. We got to learn. Okay. So we're going to come in here. Let's go to the next one. While we're waiting here, let's go. We were waiting for that other market to start to move and shake. Let's go see if it is. It's moving and shaking. Nope. Look at that. Good thing we didn't keep trying to trade. We'd probably lost all of our 420. 420? That's kind of a funny number to end on. Market was really moving right there. It was moving and shaking. Now it's kind of dead, isn't it? Died. Market dies with this scalp strategy. You can't trade it because it's gotta be moving. It's gotta be shaking. It's gotta be making trends, and it's gotta be trending up or trending down. If it goes sideways, this strategy will kill you. Okay, so wait until the market's really kind of making an obvious trend and kind of sticking to it. We could go back to our Heikenashis. You could also come in here and say, Lan, why don't you just buy on that arrow? That's what we should have done on the. That's what we looked at. Was it the morning session, or was it the? I think it was power hour. No, I can't remember whether it was the morning session or the power hour session, where we scalped out like what was it? I don't know. We did pretty good. It was like over almost $600. And then we went and looked back in time, and we're like, man, alive, we'd have made thousands of dollars if we'd have just day traded it, if we'd have scalped and trailed it instead of just scalped it. We should be scalping and trailing instead of scalping. This is a beautiful trend. How big is that trend? If you'd have just bought right here on this arrow, of course, you didn't know that. I mean, you didn't know. Look at how crappy everything was before that. But the arrow, if you'd have just got in on that yellow dot to the arrow where it's stopping you out right now, that was a $960 move with a $1,000 investment. That's almost 100% return. That's craziness. Now there's what did I just do? So there's an arrow to the downside. You want to do it? You want to take that short position? We're chasing it now. Hurry up, Lan. Let me put this back here a little bit. That's a little close. We'll just put it right on that yellow dot. Just like we would have done here, right? Just like we said we should have done here. Woulda, shoulda, coulda. Got in a little bit late, not at the yellow dot, but we'll see. Now we're going to come in here, and we're going to tell that to edit, and we'll tell it to just trail. Trail to trail on the yellow dot ATR. We put this down here at the halfway mark. You don't have to put it at the halfway mark. You could put it clear down here at the full Monty, and then just let the stop order take you out. Of course, this could just be a little ABC pattern like this, right? Up, down, get a couple of 3-bar reds and take off and go to the moon again. We'll get stopped out with a big old loss. Is that what's going to happen, or is it going to come back down to that cone of probability down here at the yellow bars, yellow line? We're only in with one. It's a onesie, but that's still a big risk. From here to here, where we'd get out if we were wrong, still $260. We'd lose 50% of our 420. And if we did that, we'd be very sad. Where's our natural trend lines? Should we do some trend line work here? So we're going to come in here. That's the natural trend line. You can see it going right up that thing just like a train on rails. We got another one coming down the other side, just like that. So that yellow dot is behind our natural trend line. Uh-oh. Look at it turning around. Not falling. It's like, why would I fall, Lan? We just drove it all the way up there for a reason. I wanted those shares. That's why we bought them. Why would we dump them now? In fact, I want some more. These are the retail traders taking short, liquidating their longs. This had to be some sort of an institution. This was an institution. Now they're shorting. Think the institution is going to liquidate any of their positions? Probably not. This is probably retail traders bailing out. Who knows? Who knows? Try your Fibonacci ruler in there, Lan. Okay, I will. I got to put it from right there at that start of that green trend. But we know where it's at. It's right there, dead center of that yellow bar. Fibonacci sweet spot's right here. That's the cone of probability. We just expect it to come back into the cone of probability. It did. It came down and touched that 38.2. Oftentimes it'll come down and touch that 38.2. This is something I've noticed. Comes down, touches that 38.2, and then takes off and goes to the moon again because it's just too strong. If that happens, then you're sad because you got your stop still clear back here, $250. So what you do is you're like, well, I don't want to take that big of a risk. What if it comes back? Okay, well then bring your stop in, stop trailing, and put it at break even at this point. But then you got a pretty good chance of the market coming back and stopping you out at break even because you brought your stop in too quick, too close. But of course, if it comes back and stops you out break even, well, it's probably not a trade you want to be in anyway. Come on, we want to see you go, go, go. Down into the middle, down into the right dead center. Let's go down and hit that center of that Fibonacci sweet spot. We're up 260, 280, 300. If we were in with multiple contracts, now it'd be good to take a couple of them off. It hits that 50%. If it hits that 50% line, that'd be a good place to take some profit. We could put our limit order in there. This comes down and touches that yellow. We'll take that profit off right there. That's a good little scalp. Come on, you can do it, buddy. There we go. Just like a beautiful thing. We're up $780. Now watch it go all the way to 78.6 and we'll go. You idiot. Why didn't you stay in? You could have had another $470. But it hit the 50. That was a pretty good spot to take profits right there. We only had one contract. If we had multiple contracts, we could have left one running. But now that it's here, could go down to 61.8. This is a range bar 50. I mean, we go down to a smaller range bar, and this will break that big old bar down into 6 or 8 or 10 bars. And then you have a better kind of a macro view of it. What about your scalp, Lan? What about your scalper strategy, Lan? What about your scalp strategy? We could do that too. But I don't know. I wanted to pull way back to put on the scalper. And then to look like it was going to push forward one more time. It touched that 50. I think it's going to back off from there. I don't know. It's backing off right now. Let's go say hi to some guys while we watch this. Hey, Bruce, there he is. First one in the list with the gold medal. How you doing, Bruce? Good to see you out here in the afternoon session. Kirk, same. It's great to see you guys. Your little stalwarts out here that love to come and trade with me. It's fun to see you. Our little community. Gary Thomas, great to see you, Gary. Thomas Shaw's out here. It's great to see you, Thomas. It's fun to see you guys who are here regulars. Hopefully, tell me how you guys are doing. Any of you up $780 in our, you can't see this, can you? Let's put this over here. There you go. That's easier. Now you can see. But you can see right there, 780. Any of you guys up over $780? Oh, look, it's breaking below 50. It's going for the 61.8. It's going for the 61.8. It's like playing football. I always say trading's like playing football, and the Fibonacci ruler is your football field. So this is the end zone. We're at the 50-yard line right now. Going to go to the 61.8 yard line, down to the 78.6 yard line. See if we can go down and make a touchdown, go all the way down into the end zone. Or is the defense going to get a hold of the ball and start driving it back up again? Oh, this is the offense, right? So this would be the offense trying to bring it this way. So the defense is trying to keep them from coming down. Got the offense going to take the ball and go the other way. Kirk's up $1,700. Shorten the ES today. Way to go, man. Sweet. Kicking my hiney. How long did it take you to do that? You do that in 10 minutes, 30 minutes, an hour, all day? What was your strategy? What'd you do? Did you trade options? Did you trade contracts? Did you scalp and trail? Did you trail? Did you scalp? What'd you do? How'd you make that kind of money? How about writing an article for Pit News Magazine, Kirk? Tell us what you did, what you do, what's your favorite thing, what you feel. It's always good to have other people writing in Pit News Magazine. If you want to submit an article of some of your experiences, you might just get published. Okay, it's backing off. Look at this. We might switch back over to the Bulls having the ball, and this is the Bears. This is the Bulls and Bears. I always laugh because a lot of people, whenever you point that out, that Chicago has the Bulls and Bears, are like, what? They don't realize that that was a reference to trading in Chicago, not in New York, in Chicago. Why? Because we trade out of Chicago. Because we trade the futures exchanges out of Chicago. That's why we have the Bulls and Bears football and basketball team in Chicago. What do we have in New York City? We have the Mets and the Yankees. The Jets. Remember the Jets? Kirk says he had one lot scalp and trail. Wow. One lot scalp and trail. 7 separate trades. That's awesome. That is beautiful. You did that with one lot. That's pretty incredible. You must have caught some good trades. 7 trades in all. That's sweet. Nicely done, man. Nicely done. All right, the Bulls have the ball. Do you think the Bulls are going to be able to take it up and a break into the new end zone? Or do you think they're going to get their heinies handed and the Bears are going to take back over and drop it one more time? Yep, Bears are taking over. It's just for fun. Put one in there to see if the Bears can push it down. Back down into the 50-yard line. Come on, Bears. Put our stop up here just a little bit out of reach. Okay, Bears. Come on, Bears. Uh-oh. Bulls are grabbing the ball. Taking it back up. Bulls are going green. Bears are trying to push them back down. Bulls are going up long. Oh, no. Oh, no. We got tackled behind the line of scrimmage. We got tackled behind the line of scrimmage. We lost yardage on that one. $195. That was a nasty trade. Well, does it look like the Bulls are going to take over then and go? Should we run the Bulls? Should we get on the Bull side and go long? That's the second attempt it went up there. See if the Bulls can take it and go. Come on, Bulls. Come on, Bulls. Boy, they're sitting here playing right at the 50-yard line. They don't know what to do. We're going to get stopped out again. Bulls aren't able to push it higher. Bears are pushing them back. Oh, now the Bulls are going to get tackled behind the line of scrimmage. Yep. We got tackled behind the line of scrimmage that time too. 140. We lost 145 yards on the play. We lost 195 yards the first time and 145 yards the second time. We've given up almost half of what we made. Guess it's time to walk away for a little while. Let's go back over to the stock market and see what they're doing. All right, so let's go look at Amazon. Amazon, that's a 15-minute chart daily. Look, Amazon popped hard and then it dropped too. It dropped too. I think these big firms are getting set up and ready and nervous. They got that 3-drive pattern in there. They got the top of their trend. I think they're getting ready for the elections. Lan, what's your Bitcoin doing? Well, I was all showing off and talking big about my Bitcoin, saying it was about ready to break $10,000. That's what you get for bragging. Karma, my friends. It's at 6,800 right now from where I was. So I was all the way up to 10,000. And I said when I hit 10,000, I'm like, I should probably take my $10,000 in profit. But did I know? I hung on to it. Why? Because Goldman Sachs says Bitcoin's going to go to $1 million. So I'm playing the long game here. But it's back down to, I'm only up 6,800 now. I was up 10,000. So it's pulled back against me a little over $3,000. So that's not good. But, you know, market's moving waves. That's what they do. You guys, any of you holding SVOL? I got some SVOL, and it just keeps flushing on this. I think that the market's scared. You know, that's why I think it's dropping. Everything is dropping. Everybody's scared. They're worried about the elections. I think everybody's worried about the country going up in flames. So we're getting a little nervous. I can see it. You can look at the SVOL. Let's go look at SVOL just for fun. We'll pull it up right here. I'm not hurting too much because I got it really good. I got most of my SVOL right in here when I bought all my SVOL. So you can see I'm not sweating bullets too much. Plus I've had a couple of big dividend payouts in there too to help me. So you can see it kind of dropped good and hard today, but with all my dividends, I'm just a little tiny bit underwater by like $1,000 or something, which I'm not too worried about because I got a dividend coming in. My dividend is coming in is going to be, where's my dividend at? Sitting in here. They're going to give me a dividend of $3,254.69. That's my dividend on my SVOL. That's a good dividend. But I'm down about $3,000, $4,000, $5,000. So I'm actually down about $2,000. But I've already made a couple of other $3,000 dividends too. So 369. I'm about break even, I guess. Probably in here at this point. But as soon as the volatility goes away, what does SVOL do? Turns around and goes back up. Just goes back up to the neutral zone. So if I can just kind of sit through and realize I'm not really down that much because I've made so much money in it over the past period of time. Plus I played a few ups and downs in here too. So I made a bunch of money on this one. I'm up pretty good still. Even though I'm in a little drawdown on my open position right now. Not worried about it. Not too worried about it. But look at this. This was ugly right here. I had it here. It came down here and I was like, oh crap. So I bailed out, which was dumb. And it came right back here. I got right back in where I got out. And so then when it all the way back up, I made a whole bunch of money, took a bunch of it off, got my dividends, put it back in, got my dividends. Now it's coming down in a nice little 3-drive pattern down in here. So could it come all the way down to this yellow line? It could. I mean, elections come. It could pass that, could blow right past there. I'd be in some nasty drawdowns. But when the things calm down and volatility calms down, it should turn around and go right back up to this location up in here. I'm expecting it to come all the way back up into here. Where's my, there. I think it should come back up into here. And if that's the case, that'll be good. I'll be good. I'll be okay. Of course, if it just keeps on going and going and going, the country burns, burn, baby, burn, I'll be in trouble. Microsoft. There's Meta. Meta even had, you know what? Meta even tanked. I think everybody's just seeing, it's the mathematical models of 3-drive patterns. I think there's a lot of, even though you had really good earnings on Meta, they flushed. Why would Meta flush on 3-drive earnings? Because the mathematics take over. seen it so many times where you have all these companies having really good earnings. They have a big, and then flush. Why? The mathematics take over. Geography, not geography, but geometry. It's a sad state of affairs. Even NVIDIA, the darling of the industry, flush off those 3-drive patterns. Guys, I'm telling you, use those 3-drive patterns. Use those progressive trend lines. There's no better. I always say it, I'm nobody special. I'm just some guy on YouTube, but I've been doing this for 40 years. So I've been watching it, and it just happens too often. I've seen it so many times where those 3-drive patterns, it doesn't matter. It does not matter what the fundamentals are. They have great earnings, and if it breaks those 3-drive patterns, they flush it anyway. They don't care. It's all the probabilities and mathematical models that are built into those computer systems that trade these big things. That's what I believe. Do I know that for a fact? No, I don't know it for a fact, but my experience, and when I was in Chicago, I saw those big mathematical formulas, those big computers that they would trade with, and that's what they told me they were doing. Did I see it myself? Did I walk in and write the program for BlackRock? No, I didn't see the BlackRock program, but I saw other companies who did the same thing, and that's what they told me they did. So that's why I believe so strongly in it. Just the great big huge companies. That's where they run their formulas. That's where they run their quant systems. That's how they do it. They do it off of these probability statements, and that probability is the most popular common one. Is that one I showed you, the delta cone. And the reason is because it's built right into the market with options. I mean, you can see in options. That's what options are. It's that delta cone of probabilities, all built around options. The whole market is built around that mathematical model. It just works. It has to. It's almost like it has to do it because it's mathematically calculated into the system. I don't know. I'm just pontificating, just some guy on YouTube, just some little fart out here. Been watching these things for 40 years, seeing them do the exact same thing over and over and over and over again. So look at that. Oracle broke that natural trend line. Flush. There's Pfizer. Everybody's probably got a little Pfizer in them. That's funny. I can't hear you guys laughing at my jokes, so I'm sure I'm laughing at them for you. Got a little Pfizer in you. What about Palantir? The other darling of the industry right now, flushing. Why? It's at the 3rd-drive pattern. It's breaking those natural trend lines. We put an order to buy 300 Palantirs at the 50% retracement line. Is it going to come down there and let us fill our order? Maybe. Don't know. If it doesn't, then they're going to give us $153, and that's all we get. Well, it's only trading at $35 a share. The percentage is pretty good. Think we're going to get some shares down there? I don't know. We bought 3 of them. We could have vertically diversified. We could have put one down here and one down here, but that's okay. That's right where we want them. PayPal is flushing. Look at that. Everything's flushing off of these 3-drive patterns. You got another one right there. It's kind of an ugly one. I don't know. You want to draw it in there? Right there to there, just to show that we can. Preferences. Did that snap? Yeah, that's where it's at. That's the low. Anyway, how far is it going to go? Nobody knows. We don't know how far it's going to flush. We just think it's going to flush back to at least the Fibonacci sweet spot, right? Down into the 50% level. Could come down to the 61.8 golden ratio. Could even go surpass that and come all the way down to that 78.6 before it turns around and starts going up. We don't know. Nobody knows. It could stop at the 31.8 down here. It doesn't even have to come down that far. It could just start to go right here. Nobody knows. We don't know. But what are the probabilities? Probabilities are we're going to see it come down somewhere into that Fibonacci sweet spot, which is right down around that red line. Let's look at the cues. Look at that. Flush, 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 just like we predicted. This is why I have no positions in the market other than SVOL. SVOL is the only one I have in the market. Oh, and Bitcoin. I took all my other stock market stuff out. Everything. I'm flat the market with everything except for, and I can say that now because, well, I said it the other day. I can say that now because I'm feeling pretty smart about myself. Except for S-ball, but that's a totally different game that you're playing with S-ball. Because S-ball doesn't trend like normal markets. It's just volatility. And I'm playing the volatility. So let's see if the country burns in 5 days. If it does, volatility is going to go up even more, and I'm going to be even further into the water. Just give me an opportunity to buy some more, though. Just put some more in there, and then when it rebounds, goes back, and they put the fires out, everything will be good. We'll be good, right? There's not going to be any strife in the country in a couple of days. Everything's going to be good. We're going to have a smooth transition from one to the other. Smooth, natural transition. Look at this is Reddit. What the heck is Reddit? Do you guys know what Reddit is? You ever been to Reddit on the website? Reddit.com. It's kind of this thing. This is Reddit. So Reddit is kind of this thing. This is the Reddit group called Wall Street Bets. They just have all kinds of stuff on here. It's kind of like Reddit is kind of like Twitter. That's what it is. So you have all these different groups. So this is just Wall Street Bets is just one of the groups on Twitter or on Reddit. But that's what it is. It's kind of and I just went to Wall Street Bets. There's everything. You can go, retirement. There's people who ride motorcycle groups. It's just groups of people, kind of like Facebook groups. That's what it is. You know what Facebook groups is? Well, Reddit is like Facebook groups, but it doesn't have all the other stuff. It's just the groups, and you can go find groups that you're interested in. See all these topics. There's games and technology. There's all kinds of things, 3D printing, computers and hardware. Just all these groups you can come and join. And then it's like you go and read what everybody's saying, and you can add your voice to the group. That's what Reddit is. And so this is Reddit stock, and they had good earnings. They advertise just like, you can advertise on Reddit just like you can advertise on Twitter or on YouTube or on Meta. And so these guys had good earnings. So can you trade options on them? That's the question we want to know. Come to the puts. Can. But look, the spread's pretty wide, 0.8. Look, open interest is nothing, but look at the volume. Nasty. That's a 1 day. Let's go look at the 50 days. Not very good open interest. See, not very good volume, not very good open interest. But I saw that on there, and I wanted to talk to you guys about it. Look at that $50 spread on those puts. Let's go look at the calls. $20 spread on the calls. Well, that's not bad. $1,400. Trading $119. But look at this. The theoretical value is $1,600, and they're trading for $1,400. Why can you buy them for less than they're worth? Well, because it's already rallied 2 big bars. They don't anticipate it's going to go much higher. I guess they're selling them to you for less than what they're worth when they're spread. Let's go look at puts again on Reddit here. So the theoretical value is $1,344. You can buy them for $1,100. Oh, so you can buy the puts for less money too. Well, that's interesting. But the volume's not very good. I want that open interest to be over 1,000. Okay, well, even with that, we can't get enough volume to trade it. I mean, you could trade it with shares if you want to go buy shares, but who wants to do that? Who wants to trade shares? Nobody wants to trade shares. What do you think this is? Retirement account or something? Yes, we trade shares in our retirement account. Why? Because it's safer. Is it really though? I guess we trade shares if we're going to do the wheel strategy. If you get if your put option gets gets hit, gets assigned, then you're going to buy the shares, but then you're just going to have them called away when you put your call option out there anyway. So it's more of a trading strategy than it is an investing strategy. Investing, we can do that. That's too simple though. And we talked about that yesterday. SCHD, that's your dividend strategy. Oh, that's what we're looking at. SCHD, that's this one here. This is what I want to put all my money in, but I pulled it out because I was worried about that 3-drive pattern. I pulled it out up here, so I'm looking pretty smart right now, but it's getting me a green bar. I wish it would come all the way back down to here. This is where I want to buy into SCHD, and I'd pump all my money back into it. Dollar cost average, I start pumping it in down in here somewhere. I don't want to see it start to rally there, although it might, because it's a different kind of thing again. That's SHD. D stands for dividends, because it's a high dividend paying stock or fund. It's an ETF. This one here, SCHG. Oh, is it G? No. Yeah, G for growth. That one, look at that. Flush, flush, flush. I took all my money out of that one too. Feeling pretty smart today. Feeling pretty smart that I pulled all my money out of that thing too. And that was in my retirement account. Usually you don't yank things in and out like that. But with the market doing what it's doing and elections and everything, I was like, I ain't gonna sit through this. I ain't sitting through this firefight. And that's where we got that same little thing happening. The reverse, the innie and outie. So there's what we're looking at on Schwab. It came down right off that natural trend line, boom, and touched it like a train on rails. So is it going to break through that? Come back down and come all the way down in here. It'll probably do a couple of these and then maybe back down. I don't know. Depends on whether they burn the country down or not. Depends on the fires. I think it depends on the fires. All right. So we got SCHD and SCHG. That's where we're going to put our IRA money. Okay, those are good places for IRA money, but let's hope that we get an opportunity to, maybe they'll light the country on fire and these will come all the way back down here. We'll have a really good place to put them on back on. Then we can get in here and then watch them go to the moon with the V recovery after they put the fires out. Who knows? Who knows? I'm just pontificating. I don't know. We've never seen them burn the country down after an election, have we? Okay, so this is Snap. Snap. What is Snap? Let's go over here. Snap.com. I think Snap is Snapchat. Snapchat is a this is Snap. Snapchat. It's a thing like with kids, like these, see these kids nowadays. Kids go in here and they chat with each other on it. And I think what Snapchat, the special thing about Snapchat is that you can send Snapchats to each other and then they will delete after a certain couple of minutes. So you send it and once they read it, it disappears. So there's no record of it. Plus, I think Snap, if I remember correctly, everything is encrypted. So you can send something privately through Snapchat and, you know, Homeland Security can't see it if you're worried about that kind of thing. So that's what Snapchat is. And then, of course, these kids, they like to send dirty pictures through it. And then the dirty pictures disappear, and then they don't have to worry that the friend on the other side still has their dirty picture. That's what it's really all about. So their dirty pictures go away. And then if you take a screen capture, you know how you can do that. You can like hit the two buttons on the side of your little cell phone. And if you have one of these little cell phone things and you take a screen capture, woo, look at that. That was crazy. So if you take a screen capture with your phone on Snapchat, it tells the guy you did that. It's like, hey, that guy, you sent him a picture of your boobies and he just did a Snapchat screen capture. So your image might go away, but he still screen captured it and it tells him that you did that. And then you can get mad at him. Hey, you delete that. I can't believe you screen captured my boobies. And so that's what that whole thing's all about. Let's see. Can you move a position from the demo account to the money account? I wish. I'm up $10,000 in my demo account. I'll just move that over into my real money account. How's that? That's a good idea, Dennis. I'm going to talk to programmers about that, see if we can make that happen. Nope, you can't do that. They don't let you do it. What if it's not filled, Lan? Can you move it over? Nope, can't do that either. They're two totally separate worlds. You can't. That's peanut butter and chocolate. You can't mix those two. So can't make that happen. But I like the idea. It's a good idea. I'm down $613 on my Microsoft. Let's not move that one into the real market. All right, let's do it the other way too, Dennis. I'm down $630 on my Microsoft in my real money account. Let's just move that into the demo. That's a good idea. I don't know if that's what you meant, but yeah, you can't do things in the demo and then move that over into. You can draw stuff. I mean, it'll save all your drawings and everything, and you can open up the same file, but unfortunately, not your orders. Okay, all right, guys, let's go back over and we'll just check out here real quick. Let's go see what the NASDAQ's moving and shaking. We should have been back over here trading. We'll take one more trade with the golden strategy. We'll see if it fills. We just made another. Oh, it lost $5. Well, that sucks. We gotta end on a green trade. Come on, there we go. $25. All right. Oh, we're $40 away from $500. Oh, kill that one. That took us $65 away. Well, that's so much for that idea. I was gonna go and say, let's end on a $500, and I lost 65. So much for showing off. Should we try it one more time? We got one more. We'll do one more time. We can't end on a red bar. Come on, baby. Come on, baby. Oh, what the heck's happening? How come it's not dropping it properly? There we go. All right, come on. There we go. Okay, we end on a green. $25. So we're up 420. Hey, that's a good number to end on anyway. You want to be Elon Musk's favorite numbers? All right, guys. We're going to call it a day. Hopefully you guys enjoyed something, had some fun here. And Pit News Magazine drops on Monday. So we're working really hard on it. I know the girls were working really super hard on it. They'll probably be working on it all weekend because I kept changing stuff. We had about 3 or 4 articles that I pulled out and got new articles come in. So I made a lot of changes right at the very last minute. They're not very happy with me. So Pit News Magazine drops on Monday. If you don't have it, go get it, pitnews.com, so you can have a copy of the new version that comes out on Monday. You got some really good articles in there. And looking forward to having you guys sharing that with you. And we will see you guys. If you guys had fun today, hit that like, share, and subscribe. Had a little financial entertainment. That's always good. I like to see the thumbs up. The more thumbs up I see, the more I know I'm doing the right thing. We can come back and do some more of it. We're going to end on 420 today. So give me the thumbs up, thumbs up, thumbs up, thumbs up. And we will see you guys tomorrow morning, Friday morning. It's going to be seasonals, Trade Miner Day. So we'll come and see stock market Trade Miner Day, and we'll see what these crazy markets are doing before they burn the country down. All right. Take care. We'll see you tomorrow.